think you mentioned earlier in the programme that the signals are contradictory. And I think that is a good way of putting it. If I look at the talent market, it is really dynamic. So we have parts of the market which are slowing, professional recruitment, for example. Some of those specialists that you mentioned, demand is falling, but it's still above 2019 levels. If I look at career transition, which is typically tied to job cuts, it's growing, but only really in the US and only really in the tech sector. And if we look at the core of the business, the flexible labor business, actually demand is pretty robust. And then when you look at it by geography, it really varies. So we have some geographies like Asia Pacific or Latin America, even certain parts of Europe, which are up double digits in Q4. And we have other parts that are slower. So it's not consistent. And I think that mismatch between labor supply and labor demand is something that continues to characterize the market. And it means there's healthy demand for what we do and what we provide to our clients.
Coram, very good morning to you, sir. Why are the shareholders... let me change the question. What are the shareholders saying to you about what they want from you in order to get the shares back to former glories? Virtually a year ago, you were trading at €44. You're now trading significantly below that as well. You're having to offer a 7.3% divvy as well, which looks salivating in terms of yield as well. Why are shareholders quite disappointing and demanding such a high yield from you in terms of valuation?
Well, so I think the dividend is a key part of the equity story, and I'm glad you're salivating at the prospect of the yield, because it is a strong yield. And as you know, we underpin the dividend. So we promised that we will pay it through a recession, and we did during the COVID crisis. I think if I step back and I look, at where we are, last year we were behind in terms of top line growth. We were not growing as fast as the competition. We've implemented an investment plan. And the reason we're so pleased with Q4 is because we've actually closed the gap on the competition, and we've overtaken them in Q4. We've taken share. I think the plan going forwards in 23 is to continue to build on that and to drive profitability and operating leverage and really get the business motoring. And that's what the simplify, execute and grow strategy is all about. It's about sharpening our focus, making sure we continue those market share gains and that we turn that into good profit and good cash.
Yeah, but I didn't even go to COVID, Coram. You mentioned that. If I go to COVID, you're actually half the price you were at the peak of COVID. There's the problem. And when I say about the dividend yield, I say it's salivating because it's 7.3%. But actually, if the company was firing on all cylinders, I doubt it would be quite so high. So that is, I agree, something that shareholders might like. But again, I'm sure if they thought the company was executing well enough, you wouldn't have such a high dividend yield at the moment. Historically, as you know, as well as I do, 7.3% means a company has a degree of distress.
I think we're clear that execution is the focus going forwards. That's what we've got to do. And it's why Q4 is so important, because you've seen us close the gap and pull out a significant gap on the top line with our competition. As we need to keep delivering that, turn it into profitability, further integrate ACCA and Modis. And I think what we'll find is that our shareholders are pleased with that progress. But it's a journey, and we've got more to do. We're very clear on that.